Welcome to Turbo Impact, where we navigate sustainability in private capital. I am your host, Kenny Chen. Each episode, we sit down with investors, allocators, and corporate leaders shaping the next era of sustainability. We explore how capital is driving the global transition and how today's decisions are shaping the future of impact. Thank you for joining us. This podcast is brought to you by Turbo Net Zero, a pure-play sustainability advisory firm driving impact across the private markets. In this episode, I sat down with Chris Lerner, Group Chairman and co-founder of Thrive Arts, and operating partner at Bonaccord Capital Partners, to unpack how sustainability is reshaping GP fund formation and capital strategy in private markets. Chris brings decades of experience advising GPs, supporting capital formation, and building investment platforms across Asia and beyond. At Thrive, he leads a tech-enabled advisory firm that combines data, regional depth, and capital markets insights to help managers scale. In our conversation, Chris lays out what LPs are really prioritizing when it comes to sustainability, how GPs can embed it into their brand and operations, and what opportunity sets across Asia he finds most compelling. Here's my conversation with Chris Lerner. Hi, Chris. Welcome to Turbo Impact Podcast.
Hey, Kenny. It's great to be together.
What inspired you to found Thrive, and what structural gaps in the private markets were you aiming to address?
Yeah, great question. Look, at a fundamental level, we founded Thrive out of a real conviction that the private capital ecosystem needed more than just kind of transactional deal makers. We wanted to be global citizens with a broad perspective and bridge builders, people who could see the full human and strategic context behind each opportunity and the people behind it. And I think today, as we get into the ESG topic, we're going to talk about how important it is to kind of have a specialist edge, but a real generalist perspective. So Thrive was created to serve a dual purpose. First, to help exceptional managers navigate capital formation, liquidity solutions, strategic alternatives in a way that's true to their identity, and not be a one-size-fits-all volume shop, but be a true complement and extension of our GP partners with a goal of going deep as product specialists and then taking the insights we learn to new geographies and investor types that help them diversify their customer base. And secondly, we had a goal of helping investors to access what we saw as cross-border, often underappreciated opportunities that, for various reasons, traditional firms often overlook. These may be due to preconceived notions, politics, or other institutional constraints. So I've said this before in the past, so others may have heard it, but I've always felt in some ways the allocator model in private markets is too siloed and antiquated. And it might seem contrarian to say this now in a world of all the conflict and wars, the tariffs, and the so-called decoupling. But I truly believe we're one world, that innovation is global and value chains are interconnected. So you really can't assess opportunities in private markets without understanding that and having that perspective. And lastly, I'm really fortunate to have incredible co-founders, partners, and a team of principals who I count as real friends. And, we were a bit fed up with inequities, myopia, and even sometimes selfishness that's often present in our industry. So we wanted to build a more culturally progressive workplace where we see business as a microcosm of life and partnership as a true ethos and not just, a jargon.
Thanks, Chris. I know you witnessed the private markets mature in Asia. How are LP expectations around sustainability evolving nowadays?
Well, I think it's highly different depending on who we're talking about. But generally speaking, from my lens, LPs are becoming more nuanced in how they approach the subject of ESG and sustainability, especially in Asia, where the diversity of the markets demands a local understanding. Initially, ESG was more about collecting data, a bit of check the box. And I feel as though, today we're seeing a shift. And I think this is true in our just sort of, global cultural consciousness, but also in our industry where LPs are approaching the subject where they want to see an alignment with values, not just policies. So when approaching this subject, my sense is for those investors to whom this subject is important, they want to know, does the manager truly understand the impact of their decisions on people, on the communities, and how that aligns with long-term value creation. So as a result of that, post-commitment monitoring is getting sharper. LPs aren't just looking for data or being a signatory on some organization. They're looking for clarity in the narrative around this subject. And they want to see how sustainability is being woven into the firm's investment DNA. And whether I would say there's a learning mindset in place, right? I don't think people expect everyone to be everything around this subject, but we want to see that there is an evolution. And so I would say, in short, LPs are evolving from kind of like a compliance focus to more conviction-led attributes.
You have worked with a wide range of LPs globally. How do sustainability priorities differ across these LPs in different regions, asset owner types, or mandate profiles?
Sure, it's a wide range. I would say sustainability isn't just one language, and priorities can differ. And like in other areas, there are thought leaders. So we may look to, and I'll talk about maybe different investor types. We may look at kind of European pension funds as really leading the way with regards to climate metrics or regulatory frameworks like SFDR. And in many cases, this is a high priority item for them. And of course, I shouldn't leave out the development institutions around the world that, really initially set the standard for everything in this arena. If we go around the globe, today I see Middle Eastern sovereigns, for example, very focused on various areas of innovation, including energy transition. Sometimes that may have a national development lens, but there's often an incredibly important aspect of uplifting local communities around that area. And in Asia, I would say we're catching up. We're a bit more pragmatic in how we approach things and kind of really looking for what are the actions that people take versus all of the verbiage and theoretical frameworks. And then in the U.S. And other areas, we see endowments and mission-driven foundations. And so they tend to have a very specific mandate or a value lens through which they're asking, how does the capital they're investing not only generate a return, but also express their purpose or help to further their mission? And then you've got other just broader financial institutions, say insurance companies or pensions, where perhaps it's a bit more institutional, compliance driven, focused on things like risk mitigation, downside protection, reputation, et cetera. So ultimately, as I said earlier, it's very important to be true to what you are as a GP, and by the same measure, not to paint all LPs with one brush. listen carefully to what are their priorities, what are their constraints, what are their long-term commitments, and then that's where you find the real alignment.
That's very insightful observation, Chris. So for GPs facing pressure to demonstrate sustainability integration, what does meaningful, credible integration actually look like to you?
Well, in a way, you're touching on a hot button of mine, because I think everything starts with being forthright and honest. So, if you don't have a robust ESG program or a sustainability process, I think you just got to be clear about that, and that's okay. We've got many emerging managers. Predominantly the priority in our industry is to generate returns for your investors. And then, perhaps there are, other stewards of capital. We talked about, endowments and mission-driven foundations that can then take those proceeds and make impact with them. So, that's obviously first and foremost, but, you do want to start to articulate as part of kind of your overall value proposition and who you are as a firm, where you're heading. Why does it matter? How are you building kind of the internal muscle around this space? And so I would say, you called it credible integration. It's not about kind of how much DDQs or policy documents you can throw at an investor in their due diligence. It's really more whether your team can speak fluently about why sustainability matters to your investment outcomes, whether it actually shapes the way you assess risk, how you engage with the portfolio companies, and really ultimately how you think about long-term value creation. Credibility, like many other things, it really comes from coherence. So, is the culture of your firm, the design of your process, your team, the composition of your team, kind of all pointing in the same direction. When that lines up, LPs see that, and even if you're still early in your journey, I think it will resonate better. Now, look, there's always boxes to check in an institutional setting, and reporting matters, and there are important groups like TurboNet who can support that process. But I would say it starts with the people, and it starts with kind of the internal culture.
You mentioned identity is important to Thrive's mission. So I want to ask you, how should GPs think about sustainability as part of their long-term brand identity and also LP relationship strategy?
So I would say, like everything, sustainability, if you're doing it authentically, it's one of the most powerful brand assets that a GP can build. Again, just look at the backdrop of the world we live in today, and how important it is for our future as human beings on this planet. This is something that if you can, make impact across multiple dimensions, including sustainability, then you're a real difference maker, and you can be a thought leader in what you do. But importantly, it's not about just signaling virtue and talking the talk. It's about showing depth and thinking long term with that. And so there's going to be some complexity around integrating that strategy. It can be a real source of relationship equity if LPs see that you're really doing the hard work and not just ticking boxes.
What does a best-in-class sustainability-ready GP look like to you?
I think that's a tough question, and I'm not sure that there's really, a perfect answer for that. In my mind, the knee-jerk response would be an impact fund, right? And one whose whole investment thesis is generated around these metrics. But I wouldn't say so. I think to me, first of all, I don't think there is such a thing as a best-in-class sustainable ready GP today, or in general. But I think what's what best in class would look like for me is how your investment strategy aligns with your sustainability goals. So that's one aspect of it. And the other aspect of it, I would say, is internal clarity around that narrative. So when I understand what you're trying to do as an investor and how you're trying to make an impact, then I want to look inside the team and understand that there's at least one senior voice who owns sustainability. And that can either be a dedicated person, like in the case of Bonaccord, or another group we work with, NSSK. The CIO is the one who is the chairman of the ESG committee and really owns and drives that. But it's important that there is someone accountable who has that vision and is leading that process. I would say those are the key elements. Sometimes you hear sustainability talked about as a constraint, but I think in those situations where it's a best-in-class firm, you're going to see that coherence. You're going to see, this as a source of opportunity, whether it's resource efficiency, demographic shifts, how you're upgrading around governance, and that is all incredibly important. And then, generally as investors, we look at, process and how does that work from how you source, and the kind of companies that you want to partner with, what you do during the hold period, how you exit, not just during due diligence or not just during, quarterly reports. So to me, I think it's less about, perfection and having all of these different systems in place, and much more about coherence, moving in the right direction, and making sure that, all of your stakeholders, of which, private equity firms have many, are coming along with you on that journey and supporting that journey.
Can you share more about your role at Bonaccord and how sustainability considerations play out from a GP stakes perspective?
Sure, I'll take a stab at that. First, let me say I am incredibly fortunate to be an operating partner of Bonaccord Capital Partners and for our firm to have a strategic partnership in Asia with Bonaccord. And one of the very, very important elements to me that are foundational to that relationship are the core values. So much of what I described around seeing business as a microcosm of life and really focusing on values that are important to me are very much the same, expressed at Bonaccord. And so that's just fantastic. And I think in addition to being an incredibly well-performing fund and a leader in the middle market, I would say, Bonaccord in many ways is a cultural leader. So as you know, at Bonaccord, we partner with GPs at the ownership level. So we're not just capital providers. We try to be partners in firm building. And so, we look for firms that are great at what they do, but also have institutional longevity. And in many cases, we're building long-term institutions together with our GP partners, or what we call our partner sponsors. So we care deeply about the long-term trajectory. What is the culture of the institution we're investing in? Who is the leadership team? Who are the future generations of that leadership team? And does the brand have integrity? And so, that's at the partner sponsor level. And there, I would say sustainability can be part of that conversation. How are they thinking about it? How do they integrate ESG? Do they have a view of the world that will resonate in 10 years? And are they building a franchise that LPs will trust across cycles? And so it's very important how, what their views are around this subject. Now, as a minority partner, we don't dictate, right? And so we're there to be thought partners. We're there to be advisors. Occasionally in great partnerships, we challenge each other and we encourage our GPs to be intentional about what they stand for, how they manage talent, how they define success. And so for me and for us at Bonaccord, I think sustainability is part of building a firm that endures. And then, of course, you can't do everything, the best in-house. So we also at Bonaccord bring in specialists like TurboNet to kind of help us analyze what we're doing across all of our partner sponsors, as well as what we're doing at the firm to continue to improve and making sure that we have a clear understanding on kind of what best practices are out there. And then we're figuring out the best and most effective way to implement them across our platform.
Next question. I'm sure a lot of GPs want to ask you this. How do you see sustainability shaping capital formation? Especially, you can talk about in the context for new managers or emerging fund manager models across Asia.
How do I see GPs? How do I see sustainability shaping capital formation for these emerging managers?
Yes.
I don't know that sustainability is shaping capital formation for emerging managers, but I do think, we are at this big transition, generational moment, however you want to call it. And so one thing about emerging managers in Asia is, they're often now younger generation, they've lived and grown up in countries and markets that are changing, and they have a deep passion to serve and uplift, those communities. And I would say that is a really important core starting point to the whole conversation. And I think in many ways, even though they're less resourced than, say, global firms operating in those markets, they are closer to the ground. And so they may see the unintended consequence of capital flows. They may be more open and flexible to understanding what impact means to a particular community, where to focus. And I think those are some very incredibly powerful starting points. So, then ultimately, as an emerging manager, especially in today's market, capital formation is tough enough. So I would say, everything I said around kind of, what is their investment thesis and how does sustainability align with that? It's got to line up. But, there's tremendous opportunity on market themes, whether it be, supply chain resiliency, circular economies, healthcare and enabling aging care that are, I think, critical to, this topic, and also very attractive and interesting investment opportunities in their own right. So again, I think LPs are more understanding when you're an emerging manager. And, if you start with this mindset and a real focus on what you're doing, then I think, it's a great opportunity for the next generation of alpha creators.
Thank you, Chris. You mentioned different investment themes. So looking across Asia's private markets right now, which strategies or segments are you most excited about at Strive?
Oh, interesting. So I just did an Asia roundtable with Private Equity International yesterday with some, incredible investors. Doug Coulter from LGT was on, Jun Suzaka from NSSK. And we were talking about this. So I would definitely, for a deeper dive on this subject, point people to that issue of PEI that'll come out next month in September. But look, I think there's, a number of different themes that stand out. And, the big ones now for allocators looking at our region really are Japan and India. And there are different reasons for that. I'm not sure how much depth you want me to go into, but certainly in the case of Japan, you have a very developed market, but one where there's still a lot of inefficiency. And so we see relatively attractive valuations in that market. We see opportunity for control, given the aging populations. lots of opportunities to add value, to consolidate, and we've got a very robust exit environment, particularly M&A side of things, where I think last year there were around 4,500 to 4,700 M&A deals in the market. And private equity is still relatively unpenetrated. So it's been a great market from a number of different perspectives. And I think just given what we've seen in the rest of Asia with lack and globally with lack of liquidity and DPI, Japan has been a standout market. India is obviously another one. India is a fast growing and dynamic economy with incredible talent and also in many cases, a role in the global value chain. So there are very clear domestic opportunities. And it's worth saying that both Japan and India are deep domestic economies, even if they're of different sizes. We're talking about both markets. I won't know the exact numbers offhand, but both markets are, both economies are driven over 50% by consumption. So that means you've got depth, and in the case of India, you've got a lot of growth. So it shows a lot of promise on multiple dimensions. And across Asia broadly, whether it's with pan-regional funds, Japan, India, or other markets, I think we're seeing buyouts as a key theme. So similar to the progression that we saw in the U.S., Asia, in my opinion, which for many years was dominated by Greater China, was an I used to call it an ECM momentum-driven market or mindset, where a lot of investors were jumping on fast new economy companies, taking minority positions. But today, we're seeing much more of a value add focus, whether that's through control or through influential minorities. Sector-wise, there are also very important themes. So healthcare, I would say, stands out among them. We have an incredible healthcare manager that has a trans-Pacific investment thesis and a global platform in Life Capital, and so also very much sustainability focused. And so there in healthcare, I think very much about the value chain, infrastructure, as well as domestic demand and resources. And that's true whether you're talking about North Asia, where we've got big aging populations in certain countries in Southeast Asia, like maybe Singapore and Thailand, or across the rest of Southeast Asia and India, where you've got rising demand and really a chance to build systems that are inclusive and resilient. And that's very, very important. I guess if we want to touch on some of the sustainability themes out there, there's still a fraction of the overall market from an allocator point of view. But I think things like waste and circularity, especially in fast urbanizing economies, places like Indonesia or the Philippines, where it's important that local innovation kind of meet the needs of the countries. That's something that we're seeing. And then also across those markets and India as well, digitally enabled SMEs that support financial inclusion and employment would be a real important point, and that would probably extend to even frontier markets in Asia. So, those are some of the key things that we're seeing today. And we're at a point where, look, the last 5 years, we just continue to see a drop in capital coming to Asia. And I think now with everything going on in the world, we're going to begin to see a shift in the other direction over the next 5 to 10 years with a rebalancing and on the heels of or the tailwinds of all the opportunity and growth in our market.
Very in-depth analysis across other regions, strategy, and sectors. So I want to ask you one observation we are also seeing in the region, given the current environment in Asia. Traditionally, there's a lot of multiple expansion opportunities when you build a project, when you acquire a firm, and there's increasing focus on operational value creation, which is very commonly discussed in Japan, India, across the APAC region. So do you have any best practices or advice for GPs when it comes to the operational value creation stage?
Oh, so I think this is a space, if you're talking about just broad operational value creation, I mean, this is a space where the market has really evolved already. And so there are different models, though, and a lot depends on what stage you're investing in, which industries do you have control, et cetera. So again, it's hard to paint with a broad brush. There are very successful models where you've got separate investment teams and operating teams. There are models where the team that makes the investment stays with the portco, brings in outside resources, senior advisors and operating partners to add value. So all of that in terms of models exist, but I would say the common point is very much around a clarity of what you're trying to achieve, having that alignment with management, and then really just pushing on those levers and measuring those outcomes and making adjustments along the way, because it's never a straight line. So I would say those are kind of my key takeaways, and it's something that you can pick up, I would say, fairly easily, and then you can kind of dive into the depth. And why do I say you can pick it up fairly easily? Because when you speak with general partners and you just talk to them about their portfolio companies, what they're doing, if you're having a lot of repetitions of these conversations, you start to understand where there's true depth of knowledge about what's going on at the portfolio company level, and where there is sort of just a narrative around certain metrics or outcomes. And there's very much a difference. And then as you kind of start to peel the layers back, you can notice one of the most important levers, like with everything in life, it comes down to relationships, and how does that firm, what kind of relationships do they have with their portfolio companies? What does the management of those companies look like? I remember going to the AGM of another one of our GP relationships in Windpoint Partners, and I was just incredibly impressed at how all of the executives, whether they were the existing executives or new management that they had brought in, really just had an incredible rapport and camaraderie with the partners at Windpoint, and how well they spoke about each other and how aligned they were on what they both said they were trying to achieve and how they were kind of executing that. And so those are the same things that matter for sustainability. They're just much more present and much more evolved when it comes to direct operational impact.
To sum up our discussion, I ask every guest this question: what do you think is the most effective way to turbo impact in your field?
People and purpose. I think that's a theme coming out of our discussion today, with business being a microcosm of life, just people and purpose. So first, start with clarity of purpose, and then execute with precision around that. And as the person executing that purpose, be real about what you're doing, what's important to you, and develop strong relationships with all of the stakeholders around what you're trying to achieve, and then you can really make things happen. It takes a village, right? And so you've got to be able to communicate in a way where others understand what you're trying to achieve, and pull on various resources, different specialists, managers, and your own team in order to do that. So I think really the most powerful lever is relationships once you've got that clarity of purpose. And then you're going to be able to attract the right capital, the right people, and really force kind of a multiplier for impact. And last thing I'll say is, sincerity, humility, long-term thinking. I mean, that is a growing component of what's taking place in our industry. But I think it's essential to have success in making a turbo impact in our industry.
Thank you, Chris. I've always been impressed by your sincerity and the humility as well, and people and purpose. That's very insightful point and takeaway from today's discussion. Thank you again for joining us.
No, thanks, Kenny. And I feel the same about you as a fellow entrepreneur, and seeing what you're building at TurboNet. It's fantastic. We need more leaders in our industry like you. Thank you so much for having me.
Thank you. Thank you.